All right, day 43 of my journey to a $500,000 stock market portfolio. So first of all, I want to talk about a trade I made in my RESP account. If you remember either last video or the video before, I talked about a leap option, a leap call option that I bought. Normally, I don't like buying options, but I bought a 2-year option on McDonald. I bought it for $14, as you could see on this line over here. So it expires January 21st. 2022. The strike is 210. I paid $14. So just from that alone, the break even for me to not lose any money, I need the McDonald's to be trading at 210 plus 14. I need McDonald's to be trading at 224 come January 21st, 2022. And if you look at McDonald's chart, you could see that it has a good chance of reaching that because just in August, it was trading at 217, 221. So the fact that it dropped temporarily, you know that eventually over time, it's going to come back up and even surpass it. Because if you even look at the long term, McDonald's is a stock that consistently goes up. Even during the crash, it went up. So that was my thinking behind it. That was my assumption behind it. For that reason, I bought the call option thinking that it had a good chance to be successful, and plus I have 2 years, so I still have a lot of time. But being the impatient person that I am, when the stock went up a little bit, so I bought this call option when McDonald's was trading at $199. So of course when the stock goes up, the call option will go up as well. But if the stock doesn't move, the value of the call option goes down because of theta, because of time decay, because there's time value built in the option. But because the stock went up right after I bought this call option, the option value went up as well. So I was able to sell it for $19. So bought it for 14, sold it for 19. So I made about over 30% return. I bought this January 2nd. I sold it January 9th. So 7 days. So in exactly 1 week, I was able to make an extra $500 US in my RESP account. So brought up my balance in my RESP account to almost $9,000. So now the only thing I have left is Bombardier covered call, which I bought at $2.25. So I'm actually down on this position. I also sold DFN.to because although the dividends are amazing, I just didn't trust the capital appreciation. If by looking at the chart, I felt like it keeps going down. So my idea when I bought it is that even if it does go down, I'll be collecting 10 cents a month. That'll compensate for the stock price. Even if it goes down, 10 cents that I'm collecting every month will compensate for that. But I was still scared. I mean, 5 years, it was trading at $12. Now it's at $8. So I don't know what's going to happen. Even if you look at Max, at some point it was trading at $18, $19. Before the 2009 crash, it was trading at $17, $8, $16. So I don't know. I was afraid for the capital, even though I'm collecting 10 cents a share. If there is a crash, and the stock does come down hard, like when it came down to $6 here in 2008, then I think I would definitely buy it. It would make a lot of sense. Even in December 2018, it would have been nice to buy it. I bought it at $8 back then, but I sold it I think at around $9 for capital gain. Right now it's at $8.67, so it's not too far off from the lowest point in December 2018. As you can see here, dividend 15 split. Corp declares 189th consecutive monthly distribution. So 189 months, it never missed a dividend distribution. So initially that was the reason I bought it. All right, moving on. So now I've got capital in my RESP account. I'm going to be looking for something to buy. Obviously, I don't have enough for covered calls because the only covered call trade I would do right now is on ETFs like the Qs, the SPY, IWM. But any stock really, I don't trust anything anymore. Anything can come down 20-30%, even if it's a good name stock. I used to do cover call trades on Micron, AMD, WDC, Activision, EA, but all these stocks are really high right now. Intel as well, but they're too high to buy and they could easily move down. So I just don't trust anything. I mean, AMD was at $12 at some point. Micron was in the 30s at some point. So yeah, so that's why I don't trust stocks. I'd rather buy ETFs for covered calls and trust that ETFs, they always go up over time. So even if I buy it too high and it comes down, it's just a matter of time, it's going to come back up. So what I could do in my RESP account is look for other opportunities like McDonald's, look for a big name company that drops, or an ETF, even an ETF that drops hard, and just buy a 2-year call option on it with the assumption that eventually in 2 years for sure it's going to come back up, and then sell the call option for a decent profit. This is something I could do until my account is big enough to do covered calls on ETFs. All right, so if you look in my margin account, I was able to close a lot of put credit spreads because the market went up. So let me just tell you what I have left, and then I'll go through the put spreads that I closed. So what I have left in my margin account is a covered call trade on American Airlines. This one is just something I'm trying to fix or recover because my cost on this is 31, and I had a 27 strike or 27.5 strike, and American Airlines was trading above it, so I had to roll the call option out. I ended up rolling all the way to May, but at a 30 strike. So this is just this trade is not really making money, it's just a recovery trade. Box is not so bad. I've got a box covered call trade expiring in March. I've got a Dell covered call trade as well, expiring February 21st at a 52.5 strike. So I've got a put spread on DIA expiring February 7th. So this is a new put spread I opened January 8th. Collected about $61. I've got Facebook put spread expiring February 7th as well at a 200 strike. Collected about $80 something, and it's already showing me a small profit because Facebook keeps going up. I've got 3 IWM put spreads, January 24th, January 31st, and February 7th. 163 short strike, 160, and 160. So this one's not ready to be closed. It's actually showing me a loss, this one, because the strike is too close to where the stock is trading at. The stock is trading at about 165 right now. January 31st is showing a small profit, and February 7th is about break even right now. But it's brand new, so I still have a lot of time. Netflix, though, is causing me a bit of trouble. I've got 2 put spreads on Netflix. They were doing well until Friday when they dropped hard. Not hard, but decently. January 24th, I've got a 300 short strike. It's showing me a small profit right now, but the February 7th at a 305 short strike is showing me a loss, as you could see here. But I still have time. But I would prefer to get out of this before earnings because you never know what happens at earnings, which is at the end of the month. I've got 2 put spreads on the Qs. The one on January 31st, the one that expires January 31st, it's already profitable. It's already 50% profitable, but because of commissions, I'm going to have to hold on to it because commissions is going to eat a big part of it, a big part of the profit. So I'm going to hold on to it. And then I've got this one here on the Qs as well, February 7th at a 210 short strike. That's because the Qs was trading at 219 almost. So it's showing me a small profit already. I opened this January 8th, so 2 days later it's already showing me a $14 profit, but not ready to be closed, of course. But if the market continues this way, it could be closed very soon. I've got 5 put credit spreads on the SPY. Some of them were showing decent profits. I was actually trying to close them on Friday, but the order didn't get executed. So I was trying to close this one. The ones with the 315 short strike, so the January 31st and February 3rd, were showing me more than 50% profit. So I was trying to close them, but I guess my order was a bit too greedy and it didn't get executed. But they were showing me decent profits. Plus the market at the end of the day went down, so that didn't help. And I've got a put spread February 10th, January 27th, February 7th. So you see the one January 27th, even though it's earlier than February 3rd, so it should be closed before, but because the short strike is 319, it's not really ready to be closed. It's only showing me a $22 profit. I've got Tesla February 7th at a 420 strike. I had to go this high because Tesla just keeps flying. So right now it's a break even. It's not ready to be closed. Usually when I do a put spread on Tesla, I'm able to close it 1 week after for some reason, but not this one because Tesla dropped after I sold this put credit spread. But I still have a lot of room. I mean, Tesla's trading at 478 and my short strike is 420. So I've got a lot of room to be right and keep my premium. And I also have a lot of time. I've got 25 days to go. So Uber is a covered call trade, not doing too well because my short strike is 32. The stock is trading at 34 and my cost is 40. So, but I still have until March. So I still have 67 days to go to see how I'm going to manage this trade. But right now, this is not looking good because I could risk losing my shares at 32 when I bought them at 40. And I've got United States Steel. So this one's not in trouble in terms of the call option because my strike is 14. The stock is at 10.72. But the problem with this one is my cost is 18.29 and the stock is trading at 10. So I'm losing money on the stock itself, but the call option is not in trouble. All right. So let's look at some put spreads that I closed. So you could see that on December 31st, Tesla put credit spread expiring January 31st at a 370 short strike, collected $100 or $1, and I was able to close it January 6th, so 7 days later. So a week later, I closed it for 47 cents or $47. So that's more than 50% profit of the premium collected initially. If you look at December 24th, I opened a put spread on Tesla again at expiring January 24th at a 375 short strike, collected 75 cents. I was able to close it for 25 cents January 3rd. So about 9 days later. So I didn't even have to wait the full 30 days. I was able to close it for more than 50% profit. And this is a new one I have here, February 7th, collected 90 cents or $90, but it's not ready to be closed yet. So this is a good one here. MasterCard on January 6th, I opened a put credit spread on MasterCard at a 285 short strike, collected 85 cents. 3 days later, so January 9th, I was able to close it for 35 cents. That's because, as you could see here, January 6th, MasterCard dropped a little bit from 302 to 298. So that's the day, January 6th is the day I opened the trade, just because it dropped a little bit. And then the next few days, it recovered quickly. So that's why I was able to close the trade early. Only 3 days. This is a 30-day trade. I closed it in 3 days and I made more than 50% profit. So this MasterCard January 24th, I closed it January 7th, but I had opened it over here. I had opened it December 24th. So this one's about 10-15 days. I opened it for 78 cents. I was able to close it for 35 cents. So about 50% profit as well. Took a bit more time, but still less than the full 30 days for sure. And then I've got another one here, January 31st, that I closed January 8th. So I opened it December 31st. So this one took 9 days. I opened it for 74 cents. I was able to close it for 30 cents. So that's perfect, more than 50% profit. I also closed a bunch of put spreads on IWM, Qs, DIA, the SPYs as well for about 50%. And I had one on Costco, as you could see here. Let me just filter on it. So Costco, this wasn't a good one. I got into it, but then I was afraid of it. So I tried to get out of it, and I got out of it for 50% profit, but commissions ate up half of the profits. So that was not a good trade. So January 2nd, I opened a put spread on Costco at a 280 short strike, collected 60 cents. But then January 8th, I closed it for 30 cents. So it's 50% profit, yes, but commissions is about $12. So it eats up the $30 of profit I made on it. All right, in my TFSA, nothing major. Still in trouble with NEO. All covered call trades, in trouble with IMGN. I rolled my call option on Halliburton for an extra credit. If I go to orders, executed, filter on Halliburton, I collected an extra 36-cent credit on Halliburton. Grubhub is sort of in trouble because it's above my short strike of 50. The stock's at 52, my short strike is 50, and my cost is 74 or 70. So this one's a little bit in trouble, but I still have 39 days to go for the call option. Bed Bath & Beyond, I think I rolled it over, I don't remember. Yeah, on January 2nd, I rolled it to expire February 21st for an extra 21-cent credit. But now I've got capital in my TFSA and I want to use it, but everything's going up, so I don't know what to buy. Oh, I just realized MasterCard is at 311. I didn't even notice it. That's crazy. So I want to buy the Qs. I want to do a covered call trade on the Qs, but of course it's way too high. But that's what I'm eyeing. I've been talking about it for 2 weeks now. It just every time I keep talking about it, just keeps going up. Doesn't give me a chance to buy it. It dropped at some point after hours. It dropped to 211, but then the next day when the market opened, it actually rallied even higher. So I didn't get the opportunity to buy it, but I'm definitely watching it. I think I'll do a covered call trade, but at the money or in the money for a bit of downside protection, but weekly covered call trades. In my RSP, nothing special either. Square went up, so that's good, but they all expire. Most of them expire January 17th, so next week. And I've got Square and Yeti that expire 24th. So these are covered call trades because you can only do covered call trades in registered accounts. You can't do put credit spreads. So nothing special. So right now, just looking in my RSP, looking for long option opportunities, long call option opportunities like the one I did with McDonald's, but I'll be picky. I'll be patient with that. And then in my RSP and TFSA, I'm looking for covered call trades on the Qs or the SPY or strong ETFs, or even stocks if they a good name stock that drops hard. And in my margin account, I'll continue with put credit spreads. There's a lot of companies coming out with earnings this week, so I'm definitely going to look at some earnings play. All right, so if you have any questions, leave them in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.